Hello guys, welcome to our YouTube channel. In this YouTube video I'm going to show you how we use multi-time frame analysis using ICT concepts. We're going to come up with a bias from the higher time frame, the weekly and the daily, and then we're going to take a trade on the lower time frames like the 10 minutes, 15 minutes. So let us start with the monthly time frame. When you come to the monthly time frame, you have to do only two things: mark the recent low and recent high. That one is not a recent low, this is the recent low, and that's the recent high. You pull out your Fibonacci, and then you are going to mark the 50% level. So that's the 50% level. We are interested in the 50% level, nothing else. Then you just proceed to the weekly time frame. Now I have a bias. My weekly and my monthly bias says I will target the buy side liquidity, so I'm going to mark my buy side liquidity. It rests above that line there. Then there is another one right there, you mark it. Now we have our bias from the weekly and the monthly, and that is a bullish prices should be delivered. So let us go to the daily time frame and see what we have there. Now we have a trending market. You can see the first leg has already bust. Let me put my Fibonacci to the first leg first so that you can see what I'm talking about. The first leg has come out, then the 50% is tested, and then the continuation happened. So this is the first leg. Let me put my Fibonacci from the low to the high. You see it's exactly the 50%. The 50% is where price is then pushed to the upside. So we are looking for the same scenario to happen now. Okay guys, let me just delete this one and then mark the actual low and the high that the market is showing to us now. Guys, as you can see now, our bias may change because prices are not on the 50% level. You are not going to take any trades until prices reach back to the 50% level if you want to go to the upside. But if you don't want to do that and you want to take trade right away, then you have to change your bias to and inline your bias with what the market is showing. The market is showing you that prices is going to drop from there to the 50% level. So you have to change your bias to bearish now. Remember, our bias was bullish, but we have to change it for the time being to bearish until prices reach the 50% level, and then you can go and proceed to your to the previous bias, which was bullish, then target the buy side liquidity there. So let us go to the 4-hour time frame and see what the prices is showing now. So guys, as you can see on the 4-hour time frame, things are clear now. Price is trying to reach to the 50% level, and we have a very big fair value gap there. So we're going to take trades based on that and then target the 50% fair value gap there. So now I have to mark these lows, these three lows there down there, because until prices break that low, we are not sure that the shift happened. And until prices shift, you cannot sell long term. You cannot sell, but we want something quick, so we will just go to the low time frames and see how prices are trying to reach the same level that I marked now. Remember guys, now we have to look what price is doing before reaching the same level that I want the shift to happen. Let me go to the low time frame. So guys, as you can see now, my fair value gap is now more clear on the 1-hour time frame. As you can see, we have something interesting on the 50% level. I don't see anything interesting on the 1-hour time frame except that fair value gap that we are now seeing very clear. So we just go to and proceed to the lower time frame like the 15-minute. We may get something there. Guys, as you can see, that low for me is a shift, market shift. and then I see a V value gap on the other side. You can see the impulse flag here. Here there is a V value gap. Let me show you. Yeah, price is moved to the downside, then there is this V value gap here. As you can see, we just wait until price is returned to that level. I see now this one is a mistrade because price returned to the level and moved to the downside. So for example, if I take a trade from there and I target where I was expecting the prices to break so that we can reach the higher time frame 50% level, you can see this will have been a winning trade. So this will have been a winning trade. You can see we missed this trade, but no worries, no problem. Yeah, but it shows you we had a bias. You can see a few moments later we managed to pull out some results there. So and prices dropped to the 50% level. I will show you in the next video what happened, but now that's what I was telling you to watch out for. That's how you analyze from the higher time frames to the lower time frames, and then take a trade based on your bias. Our bias changed, remember guys, from bullish to bearish on the lower time frames. So see you guys in the next video.